The business model in liquor is very different than the business model in Uber Eats. It's a pretty penny, $1.1 billion. The price was definitely a result of multiple bidders. That duality and that diversification not only makes the business overall stronger, but you also share a lot of synergies by cross-pollinating these ecosystems. Another platform lesson that we talk a lot about on the show is the power of the platform conglomerate and how you can see, when you have a number one and a number two, if the number one player can branch out to be a platform conglomerate, which means you're stacking different platform business models on top of each other, right? As we've talked about Uber doing in the past here. And now you can see then the resiliency that brought to Uber in COVID, right? It wasn't just ride sharing. It was ride sharing and primarily Uber Eats, but then also Uber Freight, some other things, right? But really, Uber Eats now has overtaken in GMV the ride sharing business because of COVID and lockdowns and all this kind of stuff, right? So that duality and that diversification not only makes the business overall stronger, but you also share a lot of synergies by cross-pollinating these ecosystems, whether it's consumers that can both, do ride sharing and order food, as well as actually on the producer side, right? You've got drivers that can help deliver the food and also deliver passengers. So very interesting stuff in terms of just kind of the rise of platform conglomerates that we're seeing in that kind of sub $100 billion market cap arena. You could kind of call them normally you would call them large cap stocks, but relatively to platform size, they're kind of like mid cap. No offense to other large cap stocks that are 100 billion market cap, but in the platform game of the world of modern monopolies, $50 billion market cap is not that big relatively, right? We see a bunch of M&A in that $20 to $50 billion range, like Salesforce buying Slack, for example. A big number, but relatively to Salesforce, not that big. Back to Uber. So here they bought another marketplace business called Drizly for $1.1 billion. I think $900 million in stock, and I think $200 million in cash. The interesting thing about this deal is that the business model in liquor is very different than the business model in Uber Eats. So while you might say that these are kind of the same thing, and they're actually pretty different. And the reason why they're different is because of laws. And there's a lot of laws when it comes to restricted products like booze or, drugs, prescription drugs, tobacco, right? All these kinds of things. So the distribution practices, right, from manufacturer to distributor to retailer to customer, all very regulated. And Amazon has tried to play in the liquor delivery space many times, actually, and they've had to kind of retreat and retrench. And the reason why is because Amazon kind of likes to do things the Amazon way. They don't really like to change the core operating model. They don't do that lightly, and so that doesn't jive with liquor delivery. So the business model for Drizly is very different. So Uber Eats is taking 15 to 25% of that transaction of that meal that you buy, depending upon who you ask. If you ask the restaurant, they're taking at least 25, if not 30%. If you ask Uber, they're taking no more than 15%. So whatever it is, that's their business model, right? Primarily, they take a take rate on the GMV on that transaction. This is different. You actually can't take a take rate like that in Drizly's business. So what they're doing is they're actually charging the retailer. This also news comes with the fact that Instacart is expanding horizontally into areas like liquor delivery and prescription drug delivery and these other areas. So my theory on this is that I don't know if Uber was the originator of this deal. I actually wonder if Instacart or DoorDash or someone else tried to kind of buy Drizly first. And Dara said, no, we're not letting that happen. I don't know if this was Uber originated acquisition of Drizly. Reason why I say that is it's a pretty penny, $1.1 billion. Drizly has 3.5x'd their GMV in 2020. They just raised $50 million of August of 2020, right? So I don't think they were going into the end of last year saying, let's run a process, let's sell, right? I kind of feel like they were approached by maybe one of the other aggressors nipping at Uber's heels, Instacart, DoorDash. And then Uber said, nope, we're not letting this happen. They tried to buy Grub. That deal didn't go through. They've got a little war chest here. Maybe Uber did originate it, but the price was definitely a result of multiple bidders. This wasn't just a one bidder kind of deal. There's multiple bidders in on this transaction. And so the business model of this is different. And that's why it doesn't fit like a cookie cutter into Uber Eats' business model. You're charging the retailer. Now, there's some theory here, if you read this article, this is part of predetermined strategy for Uber to branch out into a new business model where they're launching all these kind of value-added services to the retailer, right? Which is essentially how Drizly's business model works. They're essentially they're bringing orders, they're helping with the fulfillment in different ways, they're bringing technology into these liquor shops, and it's that different model, catering to the retailer and getting kind of these different fee structures out of the retailer as opposed to kind of a purely take rate driven business. So it's an interesting deal. It's been a very advantageous run for Drizly, 350% in the past year. Wow. Well, people got nothing else to do, so they're drinking booze and they don't want to go to the liquor store. So there you go. Another smaller competitor to Drizly is Minibar. So it'll be interesting to see if anything happens there. But Minibar has built a pretty nice business as well. They've been in it kind of similar timeline that Drizly has been in it. So curious to see if, because again, I think there was multiple bidders here to get it to this price. I think there's a pretty healthy price on the business, given the revenue model, right? It's not as sexy of a monetization. Take rate's amazing. You love take rate, right? That's kind of the pure marketplace model. You're not eking out as much revenue for GMV that you can in a take rate model when you have to charge the retailer for different fees and these kinds of things, right? It's just your GMV to revenue ratio. You're taking a 25% take rate. That GMV to revenue ratio is 25%. Pretty sure that Drizly is nowhere near a 25% GMV to revenue ratio. It's just not possible when your business model is so different. So I think it's a much wider disparity between GMV and revenue, which means just from the margins and everything that happens thereafter, if you got a lower ratio, then you got less meat on the bone to work with. So I think the founders, and the employees here did very well. Investors, I think, did very well. And this probably isn't done because I think you're just seeing so much activity get into this space that I think, Minibar's probably, they're not already in talks. They're probably dialing that all in right now. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.